Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1064A, and today's date is September 1st, 2016, and the title of the episode is The Fictional Recovery is Ending. The economy is sliding into the collapse quickly. Let's get into the economic collapse financial news. Now, today we see the market is quite flat. Gold has popped up after the suppression of gold, and we're coming into the fall time frame. We're in the month of September already. School's starting again for many people, and the elections are quickly approaching. And we're seeing the economic indicators in each one of the sectors. They are declining rapidly at this point, which means the economy is taking a huge dive. And the central bankers, the U.S. government, they're going to come up with a lot of propaganda in the next couple of weeks to explain how great the economy is, how fantastic it is. I wouldn't be surprised if they bring the unemployment numbers down. Maybe even tomorrow. I think the job numbers come out this Friday, and I wouldn't be surprised if they go under 5 once again. Maybe to like 4.8, 4.7, around that area, to keep this illusion alive. And I know the elections are coming up, and they always like to make the economy look a lot better than it really is. And we've been looking at the economy, and it is really getting worse. We're starting to see signs that there's no way that this can possibly recover at this point. It's completely impossible. Walmart right now, during this incredible economy, is going to be cutting about 7,000 back office positions. Now, we have to realize that there are a lot of retailers. They are laying off a lot of people. They're closing stores, going bankrupt, and there's a lot of individuals that don't have work right now. Remember, the part-time workers, they are not counted if they're not working a certain number of hours and getting paid a certain dollar amount. So even though they had a part-time job and they were counted as having a full-time job, when they lose that job, the statistical numbers do not count them as losing the job. And this is why we see this discrepancy in how many people are being laid off and how many people actually have full-time jobs. We see IBM, they're going to be coming out very soon with another round of layoffs. So we're going to have to watch that very carefully. Auto sales we've been tracking for quite a while, and we know how channel stuffing works here. The manufacturers produce the cars, they stuff the cars into the dealer lots. Once the dealer receives the cars, those are counted as sales. The sales are not counted when they actually sell to the people. And what we're seeing right now is the channel stuffing is stuffed to the maximum. And auto sales right now, well, they're a complete disaster. Actually, the Ford executives, they have said the following. They've reached a plateau, and any type of sale that we're going to have is going to be much lower in the year of 2017. Ford also noted that retail incentives continue to run at historically high levels. Now, we saw this back prior to 2008, and that was a complete disaster. We're seeing delinquencies continually rise. And Ford also noted that dealer inventory ballooned to 81 days this August compared to only 62 days last year. Moreover, fleet sales to rental companies, they were down 32% year on year. Ford's largest vehicle line were all down. The F-Series was down 6.1%, the Escape down 2.8%, Explorer down 15.5%, Fusion down 32.6%. GM, well, they also have the same problem. Overall sales are down 5.2%, which is horrific. Dealer inventories increased to 74 days from 66 days last year. And it's not just GM and Ford. We see Toyota is down negative 5%, Honda negative 3.8%, Nissan negative 6.5%, Volkswagen down negative 9.1%, BMW down negative 7.2%. So the situation here is getting worse and worse as time goes on. And we're seeing a lot of these economic indicators. They are really declining very, very quickly. We see the American worker productivity. Well, it just got worse again. Actually, this is the biggest decline since 1993. And we can see the second quarter of worker productivity. It was down to negative 0.6%. And this is the third quarterly decline since 1979. What does this tell us? It tells us that this system is contracting. It's not expanding. It's not getting any better. It's actually getting worse as time goes on. We're noticing that all the dead cat bounces, they're gone. We're noticing that that high that we're coming off of in July no longer exists in August. We see U.S. manufacturing, the PMI, and the service sector, they have declined. The dead cat bounce is over. And we see new orders are sliding, employment is sliding. Well, market has a simple explanation for all this. That there is evidence to suggest that this is at least in part of a slowing economy. And we can see right now that the situation is getting worse and worse as time goes on. And when we look at this, we need to say to ourselves, if this economy is doing better, like the U.S. government central bankers are telling us, we should see these economic sectors increasing and expanding. We shouldn't see corporations laying off employees by the thousands. We shouldn't see stores closing, going bankrupt by the thousands. We shouldn't see corporate earnings declining. We shouldn't see corporations laying off the number of people that are laid off. By the way, according to Challenger Gray and Christmas, the number of people that have been laid off since July of 2014 up to this point is something like 1.2 million people already. And the number of people that are actually getting these jobs, well, these are all part-time. And those people who aren't getting the jobs, the government just doesn't count them. And we're noticing that college grads, they're having a very difficult time finding the employment, finding the job to pay for their student loans. It's like it doesn't exist right now. And this is why they're living at home. This is why their loans have been modified. And they modify them to how much they're making. So if they have a part-time job and they're making an hourly wage of, say, like 10 or 11, whatever they're making, they recalculate their student loans, and that's what the payment is calculated on. Because otherwise, they would be in default. We see that the central banks, they are driving all asset prices. The global central bank liquidity injections has never been greater, and at this moment have surpassed all previous post-financial crisis central bank intervention. And we can compare this economy to a patient who is laying in the hospital, who is hooked up to machines, and is kept alive on machines. They have no other function. If the machines are removed, they just die. And this is exactly what this economy is like. It is hooked up to the machines. The economy will never function correctly. The economy will not recover. It's the machines that are creating the illusion of the economy working. And we can see as time goes on, the economy will continually deteriorate. The systems, the functions will break down. And eventually, the economy will collapse. Now they can pull the machines and control the collapse. And we're starting to see this is exactly where they're headed. They want to control what is happening right now. Because we've reached the 0 point of debt creation. 45 years and counting. I mean, we've been on this debt system since the early 70s when we went off the gold standard. We see trade deficits, government deficits, unfunded entitlements, private debt, you name it. Our total debt has grown to 2.5 times GDP since 1971. And debt is a financially enhancing drug. It takes more and more to create less and less of an effect. Eventually what happens is you reach this point where there is no more effect and the drug kills you from strain or toxicity. And we're approaching this 0 point. And every dollar of debt that has been produced, well, it feeds into GDP less and less and less. This is what's been happening since we've come off the gold standard. And we can see right now in the 20 years between 1995 and 2015, the debt grew at a rate of 4.2 times GDP, and stock prices followed at 4.3 times. The total U.S. debt now stands at 348% of GDP, with stocks at 214%. Now, these combined, they're about 588% of GDP. Far more than any time in history. We are running out of time. With debt into the hundreds of trillions and the rapidly growing debt to GDP ratios, stocks that are plummeting, major banks that are failing, well, it's a matter of time. It's not if, it's when this occurs. And very interestingly, we are seeing since 1970 that every time construction spending growth slows, the U.S. enters a recession, a Great Recession, or a depression. Since 1970, we have been seeing this, and we've seen it 7 times. And here we are at the height of construction spending. It is now slowing, declining, which means we are ready for a collapse of the system. We see that Amazon, who is going to work with Wells Fargo and provide student loans to students, decided they're not going to do this at this point. Amazon no longer features Wells Fargo on its student-focused website, and it redirects visitors to Wells Fargo's General Student Loans section. And when we look at Wells Fargo's website, it shows that student loans are carrying an interest rate as high as 10.93%. Maybe this is the reason they said, something, we can't do this right now. Now, we are seeing a problem in the gold industry with banks. We see Deutsche Bank right now. They were unable to satisfy a gold delivery request when asked to do so by a client. And this is coming from Citra's Gold Service. But what is Citra Gold? They are a public traded company, and they provide investors with an efficient instrument to participate in the performance of the gold market. And Citra's Gold, they have cost-efficient trading, and the individuals, the clients, have the right to have their gold physically delivered to them. And what happens here is that the physical gold is held in custody for the issuer in the Frankfurt vaults of Clearstream Banking. This is a wholly owned subsidiary of Deutsche Bank. In order to facilitate the delivery of physical gold, the issuer holds a further limited amount of gold on an unallocated weight account with Umicore. And what we're seeing right now is that the company, Citra, makes a promise. Investors always have the possibility of demanding delivery of their securitized amount of gold per bearer note against the issuer. And the delivery of gold, well, they have the right to have their gold delivered. And we can see right now, Deutsche Bank, they said no. They said, we are not going to deliver the gold. They backed out of this. And we can see right now, since the introduction of Citra Gold in 2007, investors have exercised this right 900 times, with a total of about 4.5 tons of gold delivered. And now, it's completely changed. Deutsche Bank account executives informed the investors that the service is no longer offered. That's odd, strange. And it looks like this Citra Gold is just one gigantic paper scheme, just like all the others. And when all these individuals try to get their gold, and they're holding a piece of paper saying they have this gold, they are never going to get it. That's why you need to own physical from the start. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.